Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next to. In this video, I'll be analyzing the chart of gold USD for Friday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, as you all know it very well that gold is not showing big moves right now. Gold is trading inside a narrow channel here. So let's discuss one by one. First of all, let's proceed with DXY US dollar index. As discussed in our previous videos that the range of dollar index is 103.50 to 103.60 and 102.50. So and yesterday we saw that DXY, though it tried to cross the resistance here but ultimately failed, and right now DXY standing at 103.27. This is the current market price of dollar index here. As DXY failed to cross the resistance here, so the range of DXY is still the same. 103.5060 is still the resistance for DXY and 102.50 is still the support for DXY. But before 102.50, there is also an immediate support around 102.80. So the levels on DXY are still the same here. Though DXY failed to cross the resistance, but we cannot deny that overall the chart is an uptrend. So if the same situation remains, at one point DXY will break 103.50 and will move higher, because the trend of the market is very important and DXY is technically bullish right now. So at one point it should break the resistance and move higher. That's all about DXY as of now. Okay, now let's proceed with the chart of gold. In last 2 days, I have received more than 100 messages, okay, comments, emails, messages that, okay, and 90% of you are holding buy position on gold right now. I could see that people are holding buy position on gold. They are in loss of 500 pips, 700 pips, 1000 pips. My dear friends, what are you doing right now? This is not the way you should trade, because if you look at the chart of gold, then technically you can clearly see the market is in downtrend. So obviously you should have exited a long time ago. And if you look at the fundamental factors also, then fundamental factors are also not coming for the rescue. So as a result, there's a good chance that the downside on gold may continue. If we look at the forex sentiment meter here, you can see here is our beloved gold. 76% retail traders are on the long side, and only 23% have taken sell position. And as we all know, the market usually move against the sentiment meter. So if you also belong to the green side, if you're also holding a buy position on gold right now, then my dear friends, it's better to exit, because if the downside on gold continues, then obviously at one point you will lose your whole capital. Okay, and if you're looking for fresh entries in the market, then my dear friends, I want to say that if you're a swing trader, then obviously you can look for trades on swings. For example, here you can clearly see that the present structure of the market is like this. What is the structure here? Market is forming lower highs and lower lows. It doesn't matter whether you are a swing trader or a day trader. Okay, considering the present structure of the market, it is best to ride the swings only, because we can clearly see the market is forming swings here. So considering the structure of the market here, what should be your trading strategy? Simple: sell on rise. Okay, you guys have heard me saying about this 1,000 times. Sell on rise is the best trading strategy whenever you will see a market like this. So here also sell on rise is the best trading strategy if you're looking for fresh positions. And here we can clearly see that on 1 hour time frame, the 50 moving average is acting as dynamic resistance, and right now market is selling at 1893. So during the day, if you see the market hits 1898 1900 level, let me write it down: 1898 1900 level. Observe the market. If you see, just like the previous times, market is unable to cross the resistance, you can click on the sell button. But the only problem here is that the market has already tested the level or the moving average too many times. As we all know it very well, the market doesn't like common things here. So here the market has already tested the too many times moving average. So in that case, you may see some little bit of upside also. Now listen to me carefully. If an upset comes also, do not consider it as a trend reversal, because for a proper trend reversal, we need the backing of the fundamental factors. And today we don't have any news also. So if market shows upside also, okay, then there is a possibility that at one point market will face some resistance and market will reverse again. Try to understand my point here. Okay, so if market reverses from the 50 moving average around the 1900 level, we can look for a sell. Or if you see the market is going up, market is standing at the 50 moving average with a big green candle, then obviously you need to use your common sense and you should just wait for the right movement. Then observe the market around the 100 moving average, around 1902, around 1902, observe the market. So these are the two trading opportunities that you get on the chart of gold USD during the day. As a day trader or a swing trader, doesn't matter. Simply try to write the swings here, and in case market shows good amount of recovery, now listen to me carefully. If market shows good amount of recovery, then you can look for good selling opportunity around 1910 and 1925. These are the two levels where you can look for good selling opportunity in the market. Why 1910 level? Here you can see around 1910 level we have a FIBO 23.6% retracement level. Along with that, previous support will be working as resistance. See, previous support working as resistance. Along with that, we also have the additional confirmation from the 200 moving average, the red line. So if we combine all the three factors here, 1910 will be a very important resistance for day traders. Okay, and 1925 also FIBO 38.2% retracement level. Along with that, previous resistance here, previous support will also be acting as resistance. So there are multiple factors around 1912 as well. So 1925 and 1910, so 1925 and 1910 are two important resistances on the chart of gold if gold shows upside. If you see the market is going up, okay, wait for the right moment. Once market hit the level, okay, observe the market. If you see price is struggling around the area, you'll get a confirmation that yes, Avilash was right. Okay, and you can look for a sell position. And if you look at the options data here, and you can see here around 1910 level, we have an addition of 284 contracts here. Okay, so which is a good sign. Okay, which is a good sign. But around 1925, we have got nothing. Okay, so 1925 is simply on the technical. It's a technical level, but around 1910 we also have the additional support of the contracts. So considering the present trend of the market here, so sell on rise is the best trading strategy that you can look for. As of now, market is trading inside a downward channel here, and 50 moving average is clearly working as dynamic resistance here. Along with that, we also have a trend line. So if during the day, if market goes up, observe the market around the 50 moving average. The market has already tested the trend line too many times, or the moving average too many times, and market doesn't like common things. There is a possibility that market may go for some stop loss hunting around the area. In that case, you can look for selling opportunity around the 100 moving average around 1902, 1903. Okay, and in case market shows upside, good amount of recovery, you can look for additional resistance, strong resistance around 1925 and 1910 level. Okay, keep in mind, though the market is trading inside the channel here, 1910 and 1925 are the good resistance or strong resistances where we have strong sellers present. And my dear friend, if you're thinking about support, okay, then sadly we do not have any strong support on the chart of gold right now. The next support will be around 1850. Okay, which is far away. Right now market is standing at 1893. So logically 1850 is the next support, because 1850 is a round number. 1850 is a psychological support of the market. And if we look at the contracts also, then around 1850 we have some support. Okay, we can see that there are a good number of contracts lying around at, not around, at 1850 here. So 1850 will be acting as support, but before that you can see that we do not have any support. Technically also we don't have any strong support on the chart, and on the base of contracts also we do not have any strong support, and that's a bitter fact right now. And the market structure is also like, you can clearly see the market is breaking the previous low and going down. The best thing that I observed today morning is that, okay, whenever market is going down, you can always see that there is a difference of almost 50 pips. So whenever market is breaking the previous low here, it is making a low of around 50 pips, not precisely 50 pips, but around 50 to 60 pips. So next time, if market makes a dip, then the next bounce may be around 1880, because 1885 was the last low of the market. So 1880, 1879 can be the next low of the market here. But market has already formed too many lower lows. So let's wait and watch. I think that at one point market will try to consolidate here. But sadly, we don't have any support right now, so I will not recommend any buy position at support here. Yes. Okay. And that's all about gold right now. Okay, let's wait and watch. The weekly closing will be very, very important. I'll be updating you tomorrow with a detailed analysis for the coming week. So, my dear friends, please be careful. Again, I'll repeat, if you're holding a buy position, your capital is at stake. Do not gamble with your hard-earned money. And this is my analysis. I can be wrong as well. So please follow proper risk management. Do not gamble with your hard-earned money. Bye bye. Take care and see you tomorrow. All the best.